Hi, I'm Bob Iotti. I'm here with my colleagues Adam Sussman and Miranda Mizzen again to talk about the proposed merger between NYSE Euronext and Deutsche Börse. I think it's pretty clear that the primary strategy around that merger relates to scale and efficiencies. And I'll ask you both, what are those issues? How can they take advantage of scale and efficiency?
Well, clearly the clearing part of this has been an important consideration for NYSE Euronext. Even before they've been thinking about trying to go their own route on clearing for quite a while. And through the merger with Deutsche Börse, they would get that through Clearstream. Mm-hmm. But I think what's more interesting is what if the regulators do try to put the brakes on this? And one of the questions I would think that they would pose to the combined entity would be, hey, what are you returning to the European investors? And I think that one of the things that they could do potentially is say, hey, why not make Clearstream, the kind of vertical or horizontal clearing model that we have in the DTCC in order to kind of clear up a lot of the issues around clearing that we know have been going on in Europe for quite a while. What's your take on that?
That's an interesting question. I mean, we don't really know at this point what issues the regulators might have. I mean, on one hand, it's good to see some of this consolidation, in particular in the clearing space. We have long said here that I think 8, 10, and this morning there was another CCP created for the Eastern Europeans is too many, and we want to see a much more consolidated environment, particularly in the post-trade. And the pre-trade is in the execution environment. It's obviously a very different matter, but. So I think it may actually accelerate some of the surrounds of interoperability because more people want to interact and be able to clear through that single entity rather than just being more of a single vertical line.
Right.
Yeah. If we were to follow that model, Adam, then what you'd see is the regulators putting pressure for that model to change to be possibly more like the DTCC model, but the influence would have to come from the combined entity of Deutsche Börse, New York Stock Exchange, to try to change that model to make it more consistent across global lines. And the other factor there is that looking at the DTCC model, that's not only different because it's horizontal, but it's different because it's owned and managed by the broker-dealers and not the exchange. So the interoperability then when you go over the pond, so to speak, and deal with so many different asset classes and different customers would be at a level higher than just what we're talking about now, and I think the regulators would have a greater challenge.
Well, and I think that actually you bring up an interesting point, and I think we all admit that this is kind of a far-fetched idea to begin with. But to your point about the brokers, owning the DTCC, I mean, they obviously have a vested interest in trying to bring the clearing costs down in Europe by consolidating around, a single platform, let's say. So it could be that maybe it's through the regulators, but via the pressure of the brokers to say, hey, if you're going to let this merger go through, let's try to wring some, back office costs out of this.
Yeah, I think that's got to be the objective overall, and it's in everybody's best interest to try to do that. But I think once you get down to the granular level of trying to create distinct regulation, I think then you get into the culture, then you get into the long-time existence of DTC as it is and Eurex clearing as it is, and I think the influence is going to have to be pushed down from the exchanges, or the exchange, I guess, the combined entity, to say, look, we have to do this in order to, as you said, wring out the cost and actually extract the efficiencies that we need, and costs will go down for everyone and along those lines. And I think it makes, you say it's far-fetched, I think it makes a lot of sense at a high level. It may be far-fetched when you start looking at the reality of it and what has to take place. But I think it's a very interesting sort of food for thought and an issue that I'm sure if they're not talking about it at the table now, they will be shortly.
That's true. I mean, the one thing I don't think we'll see is a single model. Mm-hmm. Europe is just too diverse to support that, and actually the regulators themselves want competition. So if you had one that's mutually owned and the rest that aren't, that kind of creates a very different dynamic than you have in the States. Yeah. I think what is so interesting about Eurex clearing is very, it's big, it's stable, it already covers multiple assets. Mm-hmm. So it's an attractive entity.
I think the other issue that talks to efficiency is technology. And what kind of issues are faced in technology? And I think you're really looking at two different layers. One is what we now call NYSE technologies, and the other is probably more broad than NYSE technologies. It's around the data center and what NYSE is building in Mahwah and Basildon, and what the impact is and how that is all fed out from what is, I guess, Frankfurt, where is the central location of the servers on the Deutsche Börse. So Miranda, what do you think of what could play out there?
A couple of things on that. I mean, between them, the NYSE and the Deutsche Börse provide technology for an awful lot of the exchanges already in Europe. Many of the small exchanges, the etc. platform. I think as far as the data center goes, what is interesting about that is that you've already got the two main data centers in the two main centers in Europe, being London and Frankfurt. The question of consolidation of pooling all of their data together is a possibility. I guess there are probably there are going to be latency issues because there are 400 miles between Frankfurt and London, but then we already have the Norwegian Borse trading in London.
Sure.
So, but it doesn't necessarily mean that they can't keep different market models in the same way that Nasdaq has done over here in order to do different things on different platforms.
How strong would cultural issues play out, as we were talking before about the traders in Germany, for instance, accepting or resisting total move, say, for servers to Basildon for something like this? Is that something that is on the table, you think, or something that is so counter to the way Europe operates now it may be a real struggle?
Well, I think one of the first challenges is that they have different electrical outlets. So you have to get these converters, which that could be expensive.
Miranda, what do you think about the electrical outlets? No, getting back, Miranda, what do you think about?
Yes, thank you, Adam. It's a similar issue when NYSE went from Paris to London. There was a lot of noise around that.
Mm-hmm.
I mean, there's obviously there are jobs that don't necessarily transport across the continent, so there are issues to be resolved there. At the end of the day. There may be a huff and a puff, but it comes down to, am I getting a better price? Am I getting a good service? Mm-hmm. Is this a competitive? And are my costs coming down? And do I get the speed that I want? If you get all those things, at the end of the day, do I care where my servers are?
I mean, I would think that the efficiencies would or could be so great that it has to be explored. And distance seems to be an issue, but then when you look at the way other places in the world trade, you mentioned the Norwegian, even we were talking earlier about the differences between people trading in San Francisco in the U.S. and having servers in New York City. I think you're talking about hundreds of miles one way or the other, and the reason why we do it this way here in the States and the reason why they do it in Europe, in Norway, clearly is because the efficiencies are greater than the challenges. Germany's a little bit stronger with respect to their financial culture and the way they're accustomed to doing things and used to being a center of capital markets. And it'll be interesting to see how that plays out, simply because how strong is latency? Are they really trading HFT? Are they latency sensitive? And if not, and I think most of them are not, then what would be holding back some kind of centralization of the data centers?
There's a lot to be done.
Okay. On that note, we'll end this session. Thanks for your time, and feel free certainly to make your comments known on TABB Forum. This is Bob Ayati. I'm here with Adam Sussman and Miranda Mizzen. Thank you.